The latest episode of Hung Hon, episode number 14. So, full disclosure, we may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before buying and investing in stocks. I'm your host, Kong, along with my co-host, Keepson, and that just went through in a flash.
Instant. It's too
Yes.
fast for you to see.
Seriously. See, that's what happens when you're not in studio, man.
I know. But things happen.
All right. Well, okay. So let's look at what's in the news. The consumer price index has increased at the end of October by 0.2%, mainly due to the rising cost of healthcare. This is a reversal from September's drop in 0.2%. Keynote: the core CPI strips out food and energy costs. Rent increases also accounted for a substantial lift in the index as well.
Yeah, that sounds like inflation to me. And
Yeah,
which basically inflation would dictate that the Feds might increase interest rate come December or further. This is the report that everyone's referring to that makes everyone all these analysts so dead set on the fact that in December the interest rate is going to go up.
oh yeah, yeah.
So, this is an example of price-induced inflation or cost-based inflation. So the costings go up, then, prices go up.
Yeah, and that's actually a good thing for me at least because I just put my money in some money market funds, tax exempt
Mhm.
ones. Unfortunately, the returns are actually lower than the fees right now. But if the rates increase, that will change things.
That's great.
But on the flip side, I mean, that also means that rent is on the rise, and that sucks. That really sucks.
Well, inflation, I think a long time ago, the assumption is that inflation is going to be like 4%. So,
No, 2 to 3%.
well, at some point in time, I think currently it's super low right now. So it's just the price of stuff is going to keep climbing. That's just expectations. It's in the period where there's like deflation. There's a period of like stagnation or deflation. That price actually goes down, or stays the same or goes down. So I guess we're trying to. You gotta keep ahead of that curve.
Yeah, easier said than done.
I hear you. The struggle is real.
Square Inc. priced shares at $9 last Wednesday and began trading under the stock symbol SQ Thursday. This put the company at $2.9 billion, which was 52% lower from the $6 billion valuation in private funding they had received previously. Square was founded in 2009 as a company that would disrupt the payment industry, allowing small businesses to accept credit card payments through mobile devices. Visa and MasterCard were supposed to be shaking in their pants.
They are very scared.
Yes, um, it has diversified into different services, which helps keep it relevant. Um, if you want some more details on their full services, you can check out the previous episode on the subject. Unfortunately, it has come to rely on partnerships with companies such as Apple and Visa. So much for being game changers. So some investors' doubts are over the company CEO Jack Dorsey, as he's spending time between Square and his other company, Twitter. He was fired from Twitter before he recently came back, where he recently came back and trimmed down Twitter, his other company. However, on the day it debuted on Thursday, it actually jumped up a dramatic 42%, closing at 1307. Jack Dorsey now owns 21.5%, equaling a $930 million stake. Today, however, they were back down to $12.12.
Yeah, are we gonna talk about match today?
Somewhat. Next slide.
Okay.
Yeah.
All right. Then we'll wait for the next slide. It's
Okay.
relevant
Okay.
to Square though. The Square slide.
Uh-huh.
hmm
another company that you just mentioned, the guys behind Tinder, OkCupid, and Match.com, and all that other stuff, also debuted on Thursday, and they jumped as high as 24%. However, they went from Friday's 1474 down to 1437 today.
Yeah, so this company is actually very interesting for me because it's actually a company I was following, just the IPO was following, and I put in a trade order at $12. So analysts had expected Match.com, they judged that a fair valuation be somewhere between $12 to $14, and many analysts said between that range they would buy, but beyond that range, 14, they would sell. So I thought, hey, what the hell, buy at $12. But the
Yeah.
most interesting thing is if you look at why Match.com IPO'd and this company is they wanted to raise about 300 or 400 million dollars to cover debts.
Hmm.
Now, there's another thing that's a very interesting number is the shares. You see that number is just 10 million.
Yeah.
So I was following it. I was thinking, you know what? Like at what time? Like shares, the shares value is valuation of basically how many shares are outstanding, and basically how much they're worth. I think. Is that correct?
Yeah.
So essentially is that they're trying to raise 300 to 400 million dollars, which means that there's a lot of supply out there that hasn't hit the market quite yet, and they haven't quite gotten to the amount of money and capital they're hoping to achieve by selling all the shares.
Yeah.
So right now I'm looking at Match Group Inc. On the Nasdaq, and the shares are 240 million, which, if my theory is correct, there's still 160 million dollars left of stocks to be sold, which means I expect still a lot of downside pressure, and possibly, I think they might keep pushing until it's down to the $14 range. I mean, I imagine that's part of the fluctuation that's occurring because it'll climb up and it'll dip down, it'll climb up and dip down a lot. So it's not too sure. That's my theory on Match.com right now.
Well, it's doing better than Facebook's IPO, and who else is there? I mean, there's a bunch of other tech IPOs that came out, and they just completely tanked when they first came in the market.
I was thinking about the Square.com IPO, and the original valuation is like $6 billion.
Hmm.
These are like a lot of angel investors and what's called like VCs and whatnot. That's basically how much they thought it's gonna be worth when they kept investing in it.
Yeah.
I can imagine they're just so pissed right now, they thinking $3 billion short of what they were expecting. That's a lot of money to be. That's a huge target to miss, and that's a huge margin missed by.
Yeah.
I still believe in MatchGroup.com. I think it has some future, possibly, but I'm
Really,
not too
compared to
sure.
Square?
Well, I don't know. I just think that, dating has changed, and basically there is a need to monetize it. But a lot of the sentiment online right now is that Match Group is suffering from a case of cannibalism. They're cannibalizing on their own traffic. Like OkCupid's competing against Match.com, Match.com's competing against Plenty of Fish. There's like I don't think they own eHarmony.com yet. That's another competitor that's benefiting from all this acquisition that Match.com is taking.
Yeah, I don't think they own eHarmony, but as far as those other services you're talking about, yeah, they all kind of fall along similar lines, but they all have their own unique niches as well. So,
Yeah, we'll see. We'll keep watching this.
and CalPERS, the nation's largest retirement fund for California state employees, has reallocated some of their investments to safer assets. The problem they're facing is they lost 39% of their value from the 2008 recession while trying to make up for lost ground. They also want to prevent further losses by moving returns and reallocating them into more safer assets. Governor Jerry Brown criticized the CalPERS board for not taking a more swift approach to reallocate to safer funds, saying that their decision to gradually shift is much riskier.
That makes sense. Although I wonder if they're going to be considered an institution where shifting money is a lot more challenging and slower to do so. I imagine if you're responsible for so much money, you can't quickly go, hey, I'm going to just switch the funds. You will have to wait for people's approval, explain why you want to move these things, and so on, before they actually move it.
There's probably that, yeah. But I don't know, because then they're also, I think they're governed by different laws, actually. but I could be wrong.
Maybe. I don't know. That's a lot of
Anyways,
money to be exchanging hands.
yeah. But I mean, in
13.
any case, I mean, since they lost 39% of their value in 2008, I mean, you have to make twice as much. Like, if you lost, X in funds, you have to make 2x back to make back what you had originally, and that's to get back to the even point.
Yeah.
So,
Yeah, I think it's a problem being so huge, in the sea of things, because basically, any type of movement could cast a huge wake and causing a lot of ripples and whatnot to go on. Kind of like, like if Bank of America suddenly or Warren Buffett suddenly sold all of Bank of America and a bunch of institutions just let all of Bank of America go during the financial crisis, then I imagine there's gonna be like a fire. Is that called fire sale? When everyone just rushes to the bank trying to withdraw money. There's just
yeah,
be a
I
lot of
guess,
panic to ensue from that. I think that's one of the challenges of being a large institutional investor.
yeah. Oh well,
Yeah, good thing we're small and nimble.
yeah. Thousands of airport workers across Chicago, Boston, New York City, New York, Philadelphia, and Fort Lauderdale were expected to go on strike Wednesday and Thursday. Most of these workers were cabin and airport cleaners that are typically subcontracted to work for the airlines. Their demands are a $15 an hour wage and medical benefits. In Fort Lauderdale, it's not just the cabin and airport cleaners, but also the baggage handlers, ramp workers, wheelchair attendants, and janitors that will strike. Or actually, let me double check. Actually, that was a couple days ago. Let me see if they actually did strike. Sorry, I should have updated that beforehand.
It's a Monday. Things happen over the weekend.
Airport strike news. Come on. Oh, 1 day strike.
Stage one.
Wait, that was the 19th. That was still last week.
No
Uh,
updates.
apparently, let me see. Recent. Yeah.
Only the last 2 days. Except for Wednesday.
Is it this Wednesday?
Action called off.
Yeah, maybe. Oh, nope, nope. That's just an ad. Ah,
Those
get off my
bastards.
screen. You're not paying me for ads.
But we're open to it.
Cabin cleaners, yada yada yada. Yep, they actually began it Monday. Uh, so there you go. Oh, even LAX too. Hey, there you go. There you go.
Wow, airport travel costs can go way up.
Yeah. And crude oil stabilized today after worries about a glut of oil supplies. The Saudi government has pledged to stabilize oil prices, but there's still the extra oil supplies from the U.S. and other places um, that still means that there's a glut. Last week in the U.S. alone, crude oil supplies rose by 1.1 million barrels. So,
So all that hydrofracking we've been doing, shifting our energy demands away from oil
no, the
into.
hydrofracking is just for the gas. I mean, we're just talking about oil production.
I know we're shifting our energy production away, or the way we're using energy. The sources that we derive energy from now have additional sources, which reduce our demand for the oil, which
Not by
creates
much.
a
It
lot
doesn't
more
really
sellable
reduce it that.
supply.
It doesn't reduce it by that much.
Well, the news, right?
In terms of global demand for oil, I mean, it's still on the rise.
Well, our supply, though. I mean, where do you explain our supply is coming from?
Well, the fact that the U.S. is starting to produce now, that
Haven't they always
I
been
mean, like
producing?
Brazil and Russia have been producing for a while.
I don't know, but well, I mean,
Well,
there's
it's
gonna be even
because
more information.
this is exactly what the issue is, that because these other countries are producing and they're ramping up production, trying to take away market share from the Arabs, OPEC then decided to raise their production so that they could keep their market share. So yeah, they're losing money for now, but I mean, like they can still make oil at a very cheap price compared to all the other countries. I mean, Russia has been hurting like crazy because oil is so low. That's the only way they've been making money previously is because oil scarcity was so high that they could, export some oil to someone else and they would pay them a nice ransom for it.
I'm not too sure, but I mean, because so I guess what you're saying is that from when the oil prices were really high, like $90, $100 a barrel, that caused all these companies to start producing oil. And now, but then since the drop, all these companies are pretty much going out of business, and then they left over all this inventory that still exists in the market, which is causing the,
They're not out of business yet.
I see. But wouldn't they just reprice their inventory, or they could just hold the inventory?
Maybe not the Americans because they're probably getting some sort of like tax incentive from the government, and there's probably going to be some like stipulations or something. So,
All right.
but anyways, so fine. Next topic. Thanks to this oil glut, prices of oil are actually the cheapest they've been since 2008.
Well, it's good news for the economy. Bad
Yeah,
news for a lot of people invested in oil,
yeah, well, yeah, bad news
which
for
is a
me.
lot of the stock market is invested in oil.
Well, I think this is actually worse. So, did you sign up for healthcare through your public exchange? Well, if
Uh,
you chose United Healthcare, you may have to do that again next year because United Health says it won't be participating. They projected low growth enrollment under Obamacare and blamed federal healthcare laws for giving individuals too much flexibility to change plans. Plus, they didn't like how people under Obamacare were some of their heaviest users, cutting into their costs. Industry-wide, healthcare insurance stocks took a drop. Oh, I'm sorry, they dropped a couple percentage points. Kaiser Permanente said it would not abandon Obamacare. So yeah, I know that you probably wouldn't buy anything through your public exchange because you probably have healthcare through your employer, right?
yeah, but barely use it though. Although that being said, I still, I think, yeah, there's a lot that we can comment on this topic.
Well,
For
feel free to
example, a lot
comment.
of a lot of people they feel like Obamacare or you know um, yeah, basically it's called the Healthcare Act is geared toward the getting everyone covered or basically giving insurance free money, forcing everyone to buy insurance and just against their will. But really, the goal of this is really to help consumers. It's really a socialistic approach, even though there are points to it that actually benefit the healthcare industry. But in all is that it's realignment of the oath that the oath that doctors take before they become a doctor is to watch out for everyone else's well-being. Is that sometimes like you know the pursuit of profit and money and whatnot can cause a doctor to kind of stray away from their path and forget why they're in it. They're in it to help people and heal people, not so much for the profits. And one of the loopholes that really benefit health insurance companies is pre-existing conditions. And they're saying that, oh, you know what, we're not going to take care of that issue because you got that condition before you were under our insurance coverage or care. You must have gotten it before you got insurance coverage. Well, if you live long enough, and you will have some condition no matter what, and then there might be a period of time where you just didn't have health care coverage, and that's the pre-existing condition clause that most insurance companies take advantage of to basically say they're not going to take care of that issue, not like these operations cannot be covered by it because it's pre-existing condition, and so on. So Obamacare pretty much got rid of that. And so from now on, there's no such thing as pre-existing conditions. And then basically the insurance company had to pretty much cover everything for the most part. And I think that's the reason why a lot of these companies are losing money because then people just take advantage of all these services because they got rid of the pre-existing condition. But the caveat and the trade-off is that Obamacare is giving these insurance companies guaranteed clients, So just saying that everyone's on board. Now you guys pretty much compete amongst yourself to figure out a way to cover everyone. And they basically, Obama administration must have done some research beforehand and says, you know what, it's possible for these insurance companies to still make a profit if they provide coverage, but and then it's possible for consumers to benefit from it as well. And basically, I guess this is what it looks like.
Well, personally, I have my issues with Obamacare. I honestly think it was watered down because of the Republicans. And honestly, if it weren't for them, we probably would have universal health care. But knowing the political climate, I think Obama would have done a lot better in states where he probably could have gotten this pushed through. And instead of trying to push for so-called universal health care, but then forcing everyone to pay into insurance and forcing them to pay penalty fees when it actually might be cheaper for them to not buy insurance, to rather than make it a universal throughout the whole country, healthcare thing. I know this is going against the idea of universal healthcare, but like to make it to create a standard for single payer system and have the states push through for it, but provide federal funding for that. So if states that don't want to be included in this, they can be excluded if they wanted to, like those Republican states. And states like California, Massachusetts, New York, if they wanted to have universal health care, which I'm sure these states usually would, then they can go ahead and have it.
I think there's pros and cons to piecemeal adoptions. Kind of like they want the pros but don't want any of the cons. It's kind of like Warren Buffett. He's saying that too, for all these people to give away their money, or like Warren Buffett is one of the few billionaires, or part of the faction of billionaires that feel like they don't pay enough in taxes, and the rest of the billionaires asking Buffett why don't he pay, like basically just forfeit his wealth and pay all the taxes for everyone. But it's not so much about like him like donating his money to charity, but more so about him pointing out the fact that there is an issue with the system overall and that we need to do more to fix it. And I think for him, it's not so much about the individual's contribution, but overall contribution and adoption by everyone else. And I think if everyone else is willing to pay more for a tax rate, Buffett will be more than happy to, pay the new effective tax rates. I think this legislation is kind of the same. I think for every single state to issue out to pay for everyone's health care, is they're gonna incur a cost, and then other states may or may not adopt that cost, and they may reallocate their funds to something
No,
else.
one of the major costs that insurance companies are saying is an actual cost, which I don't know, that's debatable. They're saying that they have to do business throughout every different state, and every different state has their own guidelines for healthcare. So it raises up the administrative costs. So if there was just one federal law out there, right, and this is what I'm saying with
Hmm.
creating standards, is that you have one federal law, that's it, that's the law of the land, and then you say, okay, and if these states want to join under this program, then you can, right? So then those red states that don't want health care, fine, and if they have any people that want to, have health care, move to a different state. It's just that simple. So you wouldn't get this issue where, you created some law that was 1,000 pages long because you had to accommodate the Republicans and their corporate overlords.
Yeah, but I think the issue is the more challenging because then that brings into question what's the point of a federal level legislation, right?
Well, it's no different than, say, the minimum wage. There's a federal minimum wage, correct? But the states have their own minimum wage, and that may be lower than the federal rate.
Hmm. Yeah, but it brings in, like I said, it brings into question the purpose of federal level laws and then the original intent. So if the original intent is universal, like healthcare, then it wouldn't quite be universal if it's universal healthcare in California.
Then don't call it universal health care. Why are you trying to keep to
I'm
some
saying
stupid
it's the
semantics?
federal
No, I
level.
mean,
It's the
we're trying to keep to semantics and political correctness when it comes to healthcare. But I mean, like, really, if if those red states do not want healthcare, why are you forcing it on them?
well, someone has to
Because
contribute.
they don't want to join, then it waters everything down for the rest of us. So screw them. I'm sorry to say this, but screw them.
Well, someone has to pay for it. So in essence, it's we're screwing them per se because they don't want to, and I think we're trying to force them to. That's really. I mean, I imagine the load must like the whole point of it being federal is just that some of the loads bear by other states. I imagine the reason, well, part of the reason why they're refusing is some burden that they didn't feel like taking on in the first place.
Actually, no, that's incorrect because as far as federal funding goes, most of the money that the blue states makes usually tends to go to the red states in some way, shape, or form. And then on top of that, when you're talking about healthcare, because the blue states actually have a larger population, a larger pool to pull from, it's actually easier to gain money from them, and eventually it's going to go to those red states in some way, shape, or form. Once again, when you talk about insurance, it's easier to have more people concentrated in a certain area, and of course, the coastal states are a lot more concentrated.
I think it depends though. Do the red states have more people in the top 1%, or do they have
No,
people that are
I
more
mean the only
tax hurting?
large, I mean like the large red states you're talking about, Texas,
Mm-hmm. Pardon?
yeah,
Did you cut off?
Texas.
Yeah, I'm just saying Texas. Maybe Texas just doesn't want to pay for it. It's interesting
So
when
if
you
they don't
watch
want
some of
to join, they don't
the
want to join. Then
videos.
screw them.
When you watch some of the videos of people in these states that are arguing for all these policies that benefit rich people but not themselves, you're saying they argue that they want to vote for these policies because someday they might be rich. And I'm just thinking, not not for these policies you're voting on. You basically there's a ladder you need to climb, and you're shooting out every single rung above the step you're on. I don't. There's just no way you're gonna climb that ladder without those rungs, and you're just destroying all of them.
You're making some. I mean, you're making some analogies that I don't personally agree with, but whatever.
Well, we're doing away with healthcare. Basically, without the coverage and pre-existing condition, you're gonna be paying so much more for health coverage. What I like about universal healthcare is that at some point you're gonna be very old. At some point you're gonna be very sick, and at some point you might be making a decision between getting the healthcare you need and paying for food or family or just expenses for future generations. And at some point you might have to make the decision to just move on. You know,
Okay, so for you, in your instance, you had a job and healthcare before Obamacare, and then you had, of course, you have a job now after Obamacare. Has your insurance gotten any lower? Are they the same, or have they risen?
I don't know. I don't think I pay too much attention to it. I just assume it's a cost that has to be paid. And oftentimes, like a lot of my insurance coverage, it doesn't really take care of a lot of stuff. They say they reduce the cost, but you also have to pay for fees, and they sometimes cover only 50%. And sometimes these are tests that you probably wouldn't have been taken if you don't have coverage. So oftentimes I still treat it as if I don't have
It's no different than it is
insurance.
right now.
I see.
I mean, Obamacare isn't exactly universal healthcare like we all think, like, with Britain or Japan or Taiwan. You still have co-payments and even more, not even just co-payments, they won't cover everything. Like, say if you go in for some emergency room surgery or whatever, right, you still have to pay like a certain percentage or whatever. They're not going to cover everything.
I understand. I'm not saying it's covering everything. I said the whole point of the legislation is to get rid of pre-existing conditions.
No, it
And
was
to that
supposed to do
end,
more than just that. That was only one part. That was only one part.
but I would say that that is probably the biggest part.
Yeah, but it's not just that everyone's complaining about.
What is it everyone's complaining about?
Well, first of all, some people are saying that it's actually cheaper for them to not go with insurance and pay the penalty fees than it is for them to actually join the program.
Exactly. But that was part of the original intent as well. But not only that, but there's also if you can't pay for the program, like federally, if you can't afford the program itself, you can get a voucher, and the government will pay for your insurance, right?
Really, I'm not making a whole lot of money right now, and yet I don't qualify.
Well, if you qualify for poverty, if you're impoverished, then you qualify for the voucher. It's a very strict standard. You have to have a
I don't even
family
make twenty
for
thousand
like
dollars right
fourteen
now,
thousand
and that
dollars.
qualifies for poverty for a single person.
Yeah.
So, what's up with that?
I don't know. You could talk to the administration. Apparently, they identified a group of people that really need that assistance, but then you might not qualify for that group. But even then, the penalty is like $99 a year or a small fraction of your income. The whole intent is to ensure that the people who have money participate in the legislation. I think it's like 1% of your income or something if you
Yeah, but
don't
here's the
pay.
thing: you're still getting the worst of both worlds. Right? You're not getting the same amount of care you're getting with an actual universal healthcare system where everything is either covered or you only have to pay a certain one-time fee for every time you visit the hospital or the doctor or whatever.
I understand. We can definitely agree that this healthcare coverage thing is not perfect, but at least it's a step in the right direction.
Is it?
Is it not? At least it's doing away with pre-existing conditions.
Yeah, but that came before the Affordable Care Act.
And I think another factoid that says it's pretty much working is insurance companies actually not benefit too much from this policy. In fact, they're gauging and say, hey, maybe we shouldn't participate in it. And how do the insurance company lose money? How does insurance companies make money? By screwing their clients over, pretty much. You pay more than like a car insurance, right? You don't pay for for the days that you don't get into insurance. Every single day you don't take advantage of your insurance is profit for, or at least revenue for the company. And the day you take advantage of it is cost for these companies. So when they profit a lot, it's basically a lot of consumers that sign up for insurance didn't take advantage of it. But in healthcare, in this case, this article is really proving that the fact that a lot of insurance companies, a lot of people who use insurance that actually need it, are taking advantage of it.
Oh
And
no,
because of
I'm
that,
agreeing with you. I love the fact that we're inadvertently screwing over insurance companies. I love that. Unfortunately, here's a downside to that: is that why is it that these insurance companies are allowed to leave? If we can't leave them, why are they allowed to leave the ACA?
I wasn't aware of the fact that they were allowed to leave in the first place.
That's exactly what we're talking about with this article, is that they're threatening to leave the Affordable Care Act. They're not going to participate.
But is it possible to leave?
Apparently so.
I
So
wonder.
basically, we're forced to pay these insurance companies, and if they don't like it, they just go ahead and say, "Oh, well, we've taken enough of your money. That's it. Back
I'm
to
not sure
business
they're
the
allowed to
old-fashioned way."
leave, though. That's the thing. I mean, it's kind of strange that they're allowed to leave in the first place. It's a law. So,
What's the law? The fact that we have to all pay into this, and if we don't, we're fined. But these guys can go ahead and walk away scot-free.
well, I'm not sure if they're allowed to leave in the first
I
place.
think they
They're
are.
threatening to leave. I'm not sure they're allowed to leave. It's kind of like you breaking to abandon your lease, but legally you might not be allowed to abandon your lease.
They're not seceding from the union. I don't think there was any provisions where they said that they couldn't participate at all.
Well, then this act will basically be rendered null and pointless
And that's
then
what I've been
altogether.
saying. This
I'm
this
just saying if they're
whole
allowed
entire
to
thing was
leave,
not well thought out.
if they're allowed to leave, then I don't know. But like I said, it's an if, right? I mean, it seems very weird that we're not allowed to leave and they're allowed to leave.
Exactly.
So I don't know. I'm just saying they could warn. I mean, it depends. Let's look at this from the stock side of things. If they're allowed to leave, I would say that these companies that are publicly traded will probably have an impact due to pricing. Probably, I don't know. I wouldn't say up or down. There's factors that make it go up. There's factors that make it go down. For example, factors that make it go up. Perhaps they're losing a lot of money. The profit margins are slimming down because all these consumers that are frequent. Let's say this. There's a classification of people and groups for insurance companies, and these are people that the insurance company never want to take on in the first place because they're old, they're getting sick, they're going to use the coverage more than the younger people who are healthy that pay into it but never use it. This classification of people that they don't want to take advantage of, they don't want to help, they're probably what's driving the profit margins down. And this is what their participation act is actually. That's the effect. Basically the effect of they're losing money is the participation in this act. Now that's a factor that could probably drive the numbers up. But what could drive it down is the fact that they're losing a lot of consumers, possibly when they leave this act. So I would say this would indicate that this stock would be a straddle buy. In essence, is that either way, no matter what way the legislation turns out, is probably going to affect the stocks either upwards or downwards. But we don't clearly know whether or not it's going to go up or clearly know whether or not it's going to go down. So this is an instance where I would recommend a straddle play.
All right. Well, moving on to a similar topic, today's only shining performance on the stock market, pharmaceutical firm Pfizer and Botox maker Allergan officially announced a $160 billion merger. This is what's known as a tax inversion, where a larger company like Pfizer buys a smaller company like Allergan, but moves to a smaller company's headquarters, in this case Dublin, Ireland, and doesn't have to pay high taxes imposed on them in the US. In this case, however, Allergan is the one who is technically buying Pfizer, at least in name. This will give Allergan more access to the U.S. market. So what are your thoughts on tax inversions?
Not much, I think. I mean, they're saving a lot of money. I hope that government has a way to basically take advantage of that. On an interesting side note, though, Pfizer is the people that make Viagra.
Yeah.
I was thinking Viagra and Allergan sounds like allergy pills. They're two. I would say they're two great companies. Pfizer is a really great company. It's a staple. It's like a top 10 at the Dow Jones. I'm just thinking like, is Allergan bigger than Pfizer?
No. Pfizer is bigger than Allergan,
Interesting. So Allergan's buying out the bigger company, technically.
supposedly.
Yeah. I feel it has a tax evasion in all of this.
Oh, of course. And I'm sure the candidates aren't going to let this go by quietly. But I mean, what are they going to be able to do?
I don't know. Probably a lawsuit against Pfizer and
For
fine
what? They
them.
didn't break any laws.
Well, I guess there's gonna be a fine of sorts. Kind of like Bank of America or all these banks, JP Morgan and so on. They're always constantly fined for stuff. I think this is it's like a model a lot of people have.
Okay,
What's it-
well, back to the bank fines you're talking about. What are they getting fined for?
basically practices on like bad loans and mortgages. I mean, all these banks have been still taking on they're still suffering from litigation regarding their behavior during the housing crisis and their participation in it. Some banks are involved in a global currency scheme, and the side effect isn't that they go to jail or anything, they just get fined.
Hmm. Okay.
I imagine the same thing will happen with these people is that instead of going to jail, because a company, an entity that incapable of going to jail, they simply just get fined for all the damage that they possibly could have done for it, or estimated amount of damage.
All right. Well, let's take a look at the week in review. Monday rose a bit, like we mentioned last week, before dipping slightly on Tuesday, however. Wednesday saw a major rise after the Federal Reserve meeting ended, where they announced a rate hike for mid-December. So after many weeks of dropping after fears of raising rates, now investors are happy about rate hikes. Something in the media story is missing. In any case, the Dow Jones rose by 94.6 percentage points that day, and basically everything was on the rise. Thursday, however, all three indexes dropped a bit, where Friday we saw major gains. So let's take a look at today's performance. Today, all three indexes didn't continue last week's good streak. The Dow was down 31 points, S&P was down 2.5 points, and the same for NASDAQ. And let's take a look at what's in our portfolios. Walmart admitted it saw a decline in revenue because it has been concentrating on its online business and raising wages for its employees, but it's still got 5 consecutive quarters of profits. Finally, some good news for them and other retailers as well. And McDonald's has killed its dollar menu. No. now they have a McPick 2 deal where you can choose two items for $2. The items in that pick will include a McDouble, a McChicken, small fries, and mozzarella sticks. Since when did they offer mozzarella sticks? Is that also new?
Yeah, I mean, I'm a big fan of the dollar menu, and I don't think I remember seeing that.
Huh. Okay. Well, hey, now McDonald's is offering mozzarella sticks.
We expect advertising money, McDonald. We expect advertising money.
Actually, one thing I saw that they had, I guess it wasn't everywhere, but so they were allowing you to like order your fries, and then they had like basically they add like popcorn flavoring on there on the
Mm,
fries. Yeah, but it
it's
was
making me
only in
hungry.
select locations. I don't think it actually went like full scale throughout the nation.
Participation might vary.
Yeah, I think they actually stopped that program now. It was like experimental.
Yeah, speaking of experiments, there's like, AMC or a lot of theater chains will experiment with like they're known to have programs where they basically experiment with like all you can watch like pass, like you could pay a fee and then you could watch as many movies in theater as you like
Huh.
to take advantage of the fact that sometimes in theaters with no assigned seating is that um, people hop around between cinemas to watch multiple movies, and there wasn't much that they were doing to stem that. So one of the ways to basically try to recoup some of this money from people who have that tendency is to offer them a legal way to hop between cinemas and movies. But we probably haven't heard of it or seen it so far in LA. But I think there are a few programs out there. But yeah, a lot of these chains do oftentimes experiment with pricing strategies in very select locations if they're small enough. Maybe this place is a small enough place to benefit from this experiment.
Yeah, sorry, I'm just looking at this McDouble here and thinking I'm I'm pretty hungry.
I noticed your mouse movements. You pretty much your eyes are kind of focused on that ketchup.
It was. Mm.
Yep, center point. And I hear you. I'm getting pretty hungry looking at this picture myself.
All right, so let's switch to another picture, and let's look at investing strategies. So Investopedia has an article on ROI, which is a return on your investments, which basically is a look at the rise or decrease of your investments over a certain period. This as opposed to the internal rate of return, or the IRR. Which identifies the rate of discount, which makes the present value of the sum of annual nominal cash inflows equal to the initial net cash outlay for the investment. It's used to calculate how long it would take you to receive a certain amount of return, basically.
MPV. Oh, are you gonna about to cover MVP? MPV.
In short, that's the nominal price value. That's what IRR is trying to calculate.
I see.
Yeah.
I think NPV actually stands for net present value.
No, I'm sorry, net present value. Yeah, sorry.
Yeah. So in essence, is that what's NPV is to take like all the future payments you're gonna get from this investment and so on, and then bring it into today dollar terms.
Yeah.
So if the NPV changes upwards, you know that your valuation portfolio has gone up. Goes down, then not so much. I just basically want to throw that out there.
No, okay. Thank you for the correction.
No problem.
So, so usually a lot of investors will use both these in hand to hand. I mean, do you?
I wouldn't say I do. For me, it's the choice is. I mean, if I was a professional, I would definitely say go for it, and it's something you should do. But for me, I don't think there's much of a choice. Oftentimes, it's either to buy or not to buy, either to hold. Like either you just gauge things as a good time to buy or not. So I think for me, is I've taken on a very micro view of my trading strategies. So instead of a large macro view, taking all these variables, just because it keeps my life a lot simpler, And I would say that, oh yeah, recommendations. Should I keep going?
No, no, keep going, keep going.
Well, there's a lot of effects. For example, Thanksgiving coming, and today's drop in the market, or maybe yesterday's drop, they say that it's due to low volumes. What is low volumes? Low volumes is not a lot of people are buying or selling. But if you think about it, it's Thanksgiving. People are going on vacation, taking breaks. It stands to reason that the volume would become lower. You know, now that's I think there's a lot of forces and there's a lot of seasonality between the stock market, and a lot of people will attribute to these trends. Is that I think come December you're gonna look toward a lot of selling, and there's a reason why is because like a lot of companies, in order to realize their profits, they would have to sell their stocks or else they can't realize it. So what is the realization? Is that until you sell a stock, you don't have profit or losses on it. And then when you sell a stock, then you can realize the profit and losses for it, and then they become taxable. They can now become part of your bottom line and so on. So I think there's a lot of factors towards the end of the year that kind of drive the stock market downwards. So for me, is that even the I don't know to take account of everything, do net present value and all these other effects and factors, doesn't negate the fact that at the end of the day, I had to choose, like currently, whether or not I'm going to sell my stock to avoid the possible downward effects of November, like to slow down Thanksgiving and possibly sell off in December, and basically Christmas and New Year's. I mean, the volume's going to go lower. But then if I hold it until maybe January or February, then the stocks will pick back up once the volume picks back up and once the sell like discontinues and so on. So for me, the decision is always just buy, hold, or sell. So in that regard, I don't bother to do MPV too much, but I think it's still a good tool to use for sure. These calculations, these metrics,
Yeah,
without a doubt.
obviously I don't use NPV and IRR, so hey. But no, for me, at least from what I've seen with the charts, March actually, I don't know if it's a good time to sell either. I guess in comparison to how they usually are compared to like December and November's performance, yeah. But usually April, the beginning of the year, but especially in April or right before April, that's a good time to actually buy because you know it's usually at least, not all the time, but usually by the time it gets to June and July, it'll actually rise up.
I see. I think, like I've studied. I think I've been watching a lot of the behavior of the stock market during the times of turmoil that we experienced this year. Is that there's a few things. Is that if it's high volatility market, at the end of the day, stocks goes up, but at the end of the day, everyone wants to sell. And the reason why is they don't want to hold the stock overnight. A lot of like day traders do not like to holding stock overnight, and the reason why is that they can't predict what's going to happen in the next 24 hours. The same goes with the end of the week. No one really wants to go into the weekend not in an extremely volatile time, not knowing what the weekend's going to bring. For example, we engage a war with Russia or something that could happen, or Mideast crisis goes like crazy and all these countries gets into world war. That can happen over the weekend. There's 2 days you can't do anything by your stock, and then come Monday, your stock's going to have extreme movement, and there's nothing you can do about it. So a lot of people avoid those times, and I think November, December. I'm just trying to refer to the effect that a time period, or like just like end of the day, end of the week, or basically come November towards the end of the year, that there's going to be effects that you might encounter. Like around lunchtime, trade slows down because people are taking the lunches. I mean, there's a lot of effects that can come into play, and I think um, it's something that's pretty real and something should be accounted for when you're holding a stock across this time period, November and December. And I think right now the world's stable enough where we can go back to how the flow of things, the original flow of things, which is slowdowns in November, sell-offs in December. Um, yeah, I think I'm starting to rant now.
Well, I mean, if everyone's already selling off in December, you probably want to wait till for a different period to actually sell off when you are most likely going to get higher returns.
Yeah, I think so for sure. I think this is part of my theory regarding it, and I feel like a lot of um, there's a two things is I don't think Buffett's gonna sell his stocks for like his shares or anything. I think he's just getting his money from dividend investments, so there's no point in selling it. But I imagine there's like some hybrid institutions that basically want to realize. I would imagine like maybe venture funds, not venture funds, what's it called hedge funds might want to sell their stock before the end of December or like end of December so that they could say that in this year they made X amount of profit to report profit as opposed to not reporting profit. I just think there's going to be a lot of sell off, and I think it's very secular, cyclical. It should happen, and this is a fact that I do expect and try to account for. And I imagine that this year would not be any different.
No, no, I agree with you there. One thing to contend with you on is Buffett's dividend strategy. I don't think Buffett actually. I mean, for some companies, um, he does like the fact that he invests in those companies for their dividends, but it's not like he does what I do, which is drip or reinvesting your dividends into the company or anything. He definitely doesn't do that. Also, I don't think a majority of his companies are uh, dividends payers,
I'm
but
not too
that's it.
sure. I do know that I'm not too sure about that, but I think one of the companies that he did sell, he sold a significant share of a certain company, but he said that only because he needed the funds to acquire a different company, which
Yeah, the ones we talked about last weekend or
yeah.
last week.
So I don't know, but I think Buffett, for the most part, buys a lot of dividend-paying companies at the very least. I know for sure on that list is Coca-Cola and Bank of America.
Yeah. Oh well. Anyways, come on. No. There we go. Recommendations. So, stabbing at the very essence of this podcast, or the purpose of us investing, you and I specifically, that is, we're both trying to invest to make sure that we're trying to you know not lose our money, I guess.
Pretty
But
much.
this author right here for Investopedia says that that's not actually the route you should be taking.
Makes
Everyone
sense to
wants
me.
to mimic Warren Buffett and all that stuff and saying how he can choose stocks and all that, but we also forget that he's foremost more of an entrepreneur. You know, like yeah, he looks at fundamentals, but he also looks at companies that he can invest in, and once he invests in them, he basically helps them and shapes their businesses as well. Let's not forget that. So first and foremost, he's really an entrepreneur.
Makes sense to me. It's in essence that he has a network. Any company it's acquired, he can use this network to better them, swap out the bad parts with good parts and so on. I can see that. It makes a lot of sense to me.
Yeah.
How
So in other
how
words, what he's saying is, well, the author is saying that people like Buffett aren't investing to make it rich. They're investing to, well, take control of other businesses and mold them into shape. And it's those businesses themselves that actually make money. So if you want to make money, you should be an entrepreneur.
I would say that like we chances are we would not become a billionaire trading in the stock markets in the way we're trading now. Where not the
No.
stock markets have the ability to create billionaires, yes, very easily. It's kind of like gambling. Can a person who does gambling make $1 billion?
Yeah.
Yeah, it's possible. Unlikely, however, but hopefully with like at the rate we're trading, of course not. But if we were to advance to algorithmically based trading platforms, that allows us to make a lot more, to cover a lot more stocks than we normally would, and find all these diamonds in the rough that we're investing in, we could probably make a significant amount of money, no doubt. But whether or not we have that capability right now, probably not. What I think what this article is really saying is that look at all the really, really, really rich people out there, and for example, of the list of like billionaires out there, like some of them that who really make it is like Mark Zuckerberg, and then like Mark Zuckerberg, Steve Jobs, and Michael Dell, or was, they basically just focus on the product, they focus on the business, and then bam, they became rich. They're saying that, well, that's more proven to make you rich than the stock market would. But I mean, I want to allude to the fact that there's a book called How to Make $1 Million an Hour, that covers basically what happened during the financial crisis, and it basically highlights the fact that hedge fund managers, and this is an average supposedly, and I could be wrong, my memory might be a little bit off there, but I believe the author of the book, who's like a professor at some famous university, and based on his research, he's basically saying that the average hedge fund manager made 256 million dollars a year, and it's an average. And basically, the net worth of Kanye West at that time was like $84 million. So, like, perhaps the stock market isn't for you. But I mean, I'm just saying it's probably working for other people too. Whether or not it's a good venue, I don't know. But think about entrepreneurship. There's a lot of entrepreneurs. A lot of people think that they could do it, they can make a ton of money, they just got to start a business. But most startups fail. You know, like most startups
True.
fail to achieve funding. Most startups that achieve funding of that, like a fraction of people who have an idea try to achieve funding, most of them fail at that stage. Then after they open a storefront or whatever their business is, like a small fraction of them make it. And of those, a fraction of those make it for 2 years. And of those, a fraction of them make it for 7 years, and so on. I mean, the odds are pretty stacked there. I mean, either way, the odds are stacked. But I think, I mean, I still believe in doing startups and entrepreneurship, but I think there's nothing that preludes the other. There's no reason why you can't pursue investing your stocks money and then a business. I feel like maybe stocks might be a little bit safer because these are companies that have a proven track record. They have net income. They've proven that they can make money. In a way, it's roughly saying that your money is better in their hands than it is in your own hands. And until you have something on your plate that says, "Hey, your money is better on your own hands," it probably wouldn't hurt to leave it in the market, at least in a safe place on the market right now. Although I would debate whether or not this year is next year will be a safe year, or the end of this year will be a safe year. But I don't know. At least right now, either holding onto cash or leaving the market seems okay.
Have you actually read that book you just mentioned?
Oh, watch the lecture.
Oh, okay.
Yeah, it was I was playing in the background and I was thinking this is ridiculous. Well, it's like a first within he was being interviewed and basically he gave away his entire book in that interview. But I think the lecture is about an hour long or so, and it's a very interesting watch. I would definitely recommend watching it. Just this is one part of it is what really drove me toward the idea of someday somehow becoming a hedge fund manager. But I think I'm gonna stick with my own skill set that allows me to do what I do. It seems safer, better use of my time for now. But does make me somehow regret not being a hedge fund manager. $256 million a year. I was like, what? That's a ridiculous amount of money. Ridiculous amounts.
I'm assuming you're talking about the hour-long interview, not the 10-minute one.
Um, yeah, I think it's the hour-long interview where he
Make up your mind.
well, just skim it if you want. There's a chart he referenced that basically mentioned how much they were making. So that's why it's like $1 million an hour. That the number was so incredibly high that it equated to $1 million an hour. He's obviously not talking about how to make $1 million an hour, but how
Right.
people made $1 million an hour during the time of extreme crisis. And in essence, what he's getting at is that these people should be thrown into jail. It's a huge crime. Like, how can they make so much money when everyone else is suffering? I think at least it's 1223, that the third video from your list, how to make $1 million an hour at 1223, looks promising. Because at least he's saying how to make $1 million an hour, and because he's saying that, he has to explain where he metrics coming from.
All right. Well, I'll check it out.
Yeah, it's totally worth watching. It definitely makes you want to become a hedge fund manager. I think the money is out there. You just think about it. It's 2% of your assets per year, on top of like 20% of all profits that they make you. And then, when you think about small scale, like $1,000, doesn't make any sense. But when you talk about a client with $1 million of net worth, $1 billion of net worth, you get 2% of that. The asset that you're managing, 2%. If you have a $100 million client, you just make yourself $2 million just by holding their money for a year. That is a lot of money to be made. Yeah, it does make me question my paths in life, but I still enjoy what I do, so who knows? Possibly too late to change path now.
Well, not exactly. I mean, how good is your Python skills?
Huh. Well, I don't know. I don't think that matters too much. Programming is programming. It doesn't matter what language you program in.
Yeah, but most programmers are using Python for a reason. That and R.
Well, I would argue that for this case, I understand that we're arguing for the programming languages that are possibly better suited for financial analysis,
Yeah.
But a lot of trading platforms were written in Java, and then even more hardcore trading platforms at the more core systems are written in C and C++. So at the heart of the system, the more aloof and obscure systems are written in C and C++. So perhaps the art language to use would be that. And if, in essence, another thing is that to get more of the more hardware processing power, you probably want to stick with lower level language like C or C++.
I wonder if there's anything like this.
No, that's too low. That's too low, man. That's too hardcore there. It's this assembly I would say is kind of like hacker language. Like it's so low, like it's almost like being able to change out like the composition of like particles, you know? I'm gonna take out a hydrogen. I see this H2O molecule. I'm gonna change it out, take a hydrogen out and put just take a hydrogen out, you know? Make it HO for fun, or throw extra oxygen in, make it heavy water, you know? That assembly is so low, super low languages like assembly allows you to do that. But then at the same time, it's like, what are you constructing? Nothing. You're swapping out these things. You're able to access this very low level component of the system. But beyond that, you can't really do much for it.
I
So
don't
I would
know.
imagine, and in C and C++, they kind of sit low enough where you do a lot of power. You have a lot of power, and high enough where you don't have to do, well, C++ mainly. It's high enough where you don't have to write a lot of the code yourself. But then not super high where just things are done for you. Let's see here. What is it saying this? For numerical, second paragraph, for numerical backtesting, all the above languages are suitable, although it's not necessary to utilize a GUI IDE as the code be executed in the background. The prime consideration stage is the execution speed. A compile language such as C++ is often used for backtesting parameter dimensions large. Worry of such system if that's the case. Yep. But I don't know. I enjoy programming. I think programming is fun. Yeah, this goes back to I think last week's podcast where we were talking about this website that you can
Yeah.
program for to
That
have
would
your algorithm
be. Oh, no,
tested.
what was that? Quanto. Nope. And guys.
Yeah, I would participate in this company and competition if I can see other people's algorithms.
You can.
Can I? I can see the best performing algorithm right now.
Well, not the best performing one, but you can see what other people have, and like they'll actually rank it. Of course, the really really good stuff you have to pay for that.
Really?
Yeah,
How much you have to pay?
I don't know.
That is very interesting. I didn't
You,
know
you
this
know, I
before.
recommended this for a reason, right?
I thought it was just have a platform that you could submit algorithms for and then just see how they will perform in backtesting. But I didn't know that to actually show you the to give you the code for the best algorithm. Because I just thought that I don't want to write them a winning like a algorithm makes them a ton of money. I get nothing for it.
Well, you get
But
2,300 for an award if you join the competition.
that's not much compared to if someone were to give me an algorithm that will make me tons of money per day, I wouldn't even care about $23,000. I would $2,300. I would give it to them right now. I would sell my car and give them the car money and make that car money back in a day or two. But yeah, do they actually show you everyone's code?
I mean, you have to sign up and get an account and all that,
Ah, see,
but they
because it
do
was
show you some
wasn't
code.
very apparent from this thing that from the website that you can access other people's code. Because if you can access other people's code, I would pay for and sign up for this site right away.
You
And
mean the
I'll
part
just
where
find
it
the
says
best
free
training
data?
code. Data is easy. I think
Okay.
code is hard. The algorithm, if I have the access to the best training algorithm right now, I would just install it and now allocate at least like $1,000 into it and see how well it does. And who knows? If it performs just as good as they benchmarked it to be, then hell, I'm making myself a lot of money while any type of real work. I'm basically taking advantage of some super smart guy, like cheating on a test. I'm like, if I have that option, done deal. I don't know what this was gonna cost me, but definitely a legitimate plan. Yep. I'm taking on people who want to sign on to that, by the way. I would do the grunt work for you and help you figure it out. Just want 2% of your assets.
So to go back to last week's recommendations, since you weren't listening, hey,
No, I didn't
there's
know
a
that. I didn't know that they gave you the algorithm that the best trading person has. I didn't know they do that.
lesson 1, linear regression. Lesson 2, linear correlation analysis.
These are
Spearman rank
basic math
correlation.
stuff.
Beta hedging. Pairs trading. The dangers of overfitting. Instability of estimates. Model misspecification.
Yeah, still wouldn't be the thing I'm talking for. I'm looking for like this person has made 400 ROI, and this is his algorithm, and I'm like, what? They have that? Then that was something I would sign up for. This is basically how to do quantitative analysis using mathematics. I mean, that is very normal. But if the winners of their algorithms are released, that is really cool. I wouldn't mind working with them. I feel like that would be like kind of like an open source community sort of deal where we're just building on top of each other's work so that we don't have to keep reinventing wheel and just constantly furthering our objectives. But yeah, I went over the site and just didn't see anything that says, hey, you know what? Here's access to the best trading algorithms that we have proven to have. These are the backtest winners, and here's their algorithms. Just didn't see any of that. That's why.
All right.
But if that is the case, this is very refreshing news for me, and definitely be signing up in a very short period of time.
All right, so that ends today's podcast. We may or may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast, and always do your homework and research before buying and investing in stocks. All right.